Hey, crypto friends. For those of you who are new to the channel, my name is Garrett, and I am a crypto day trader whose overall goal here with my channel is to simply help other traders in the most simplistic ways as possible. So, in today's educational video, I'm going to be sharing my personal secret indicator that I love to use to short the smaller time frames. And for those of you who love trading crypto and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here with the link in the description down below this video. I personally love this exchange because they allow anybody from anywhere to be able to sign up and trade crypto futures. So if you are one of those people and you want to trade crypto futures, you can do it right here on the Blowfin exchange. All right, guys, so I am going to be showing you the indicator that I absolutely love to use, and it works great. It works awesome on pretty much any time frame, but this video is about shorting on the smaller time frames, okay? This video is going to be for people who are after the smaller profit margins on the smaller time frames. All right. So for instance, when you are scalping the market like this, your goal is not to make 100 or 200% profits. Okay. Your goal is to make smaller profit margins, but on a consistent basis. All right. So the first things first, the first thing I want to mention here is the indicator that I use a lot with all of my trading. And the reason why I make videos with this indicator a lot is because it's part of my trading strategy. Everybody's got their own trading strategy, and everybody uses different tools for their own trading strategies. Me personally, I am mostly a price action trader, so I typically use just pure price action. I'm talking about candlestick patterns, I'm talking about charting patterns, I am talking about candlestick movements themselves, and you can tell a lot just by looking at the candlesticks themselves as far as, how much momentum is going into these candles, where a potential top could be, where a potential bottom could be, all those things, okay? Now, in addition to that, though, the indicator that I use is the 7-period SMA, or the simple moving average, all right? Now, to get that, you're going to go to indicators up here, and you're just going to simply type in simple moving average, and it's going to be, I don't know why that didn't show up. Let's see here. Oh, sorry, that's right. On TradingView, you can't type in simple moving average. They call it something different on TradingView itself. So instead, you have to type in moving average simple instead of simple moving average. So moving average simple, there it is. It's right there. You just click on it, and it's going to add it to your chart. Now, the standard settings for it is going to be, I think the length is going to be set to 9. Go ahead and move it down to 7. All right. And then after that, just hit OK, and you will have your 7-period SMA sitting on your chart here. Now, all right, the first thing here is first with the 7-period SMA, actually with most moving averages, okay? But specifically with the smaller time frames here, and with all time frames really, with the with the 7-period SMA, obviously when price action is in a steady uptrend, you do not want to be looking for short trades, okay? When price is in a solid, good, steady uptrend, I'm talking about a steady uptrend, okay? Like step-by-step levels all the way up. You do not want to be looking for shorts. But if price action is in quote unquote a violent uptrend, then you can start to look for shorts after spotting a potential top. All right. And that is why I am showing you this example right here that came after this very violent uptrend right here. Okay. Hang on. I think I might have a little bit of a sneeze coming on, so I apologize. Let's see here. Nope, it passed. All right. Anyway. All right, so the way that I do things here is obviously, let's say we come into the market right now and none of this price action exists. None of this downward price action exists, okay? We are looking at right here. Let's say we come in right here and we missed our entry to get into a long to go up to the upside. I mean, technically you could still get into a long and go to the upside, but realistically, you missed it and you're not getting into it. And instead, you're going to start looking for shorts, all right? So the way that I would do this is what you do is you wait for it to find a potential top, all right? Now, when it goes up, for instance, this candle right here, when this candle went up all the way to the top right here, you can see that it stopped right around here, around $1.79. And then the next candle that came after that, it did not continue going upwards and going even higher, all right? Instead, it formed a bearish spinning top candle right there, as you guys can clearly see. And the wick only went to pretty much the same area right there, around $1.79 right there. So that right there again tells you that, okay, well, momentum in the market, momentum with the candles, and you can see it in the candlesticks themselves, momentum is starting to shift, all right? There's clearly indecision going on here, and bulls and bears have no idea what to do next, all right? And you can clearly see that in the next candle as well. So now moving on to this next green candle right in here. Same thing, we ended up going up a little bit higher, but that was just a final push probably, as you guys can clearly see based on what comes next, all right? So that was a little bit of a final push to the upside to see how much higher bulls could push it. But obviously it came back down and created another spinning top right here. And then the next candle opened and then it ended up going down to the downside. So because that ended up happening, that triggers me to put a resistance level right at the top of this candle right here, all right? So that is the now current resistance level, all right? So since this downward movement already ended up happening, you would not want to get in on a short. You would want to wait until the next opportunity to get into a potential short. So it ended up coming down and going back up and gaining a little bit more momentum, but this is where you would want to be paying attention here, okay? When it ends up coming down and then going back up, you want to be looking at this resistance level here, all right? Obviously, if price action ends up crossing it and going above it with good momentum, and by momentum, I am talking about candles like this, all right? Big, gigantic candles, all right? If it does not have a big, gigantic candle with all kinds of momentum like that behind it and crosses above this resistance area, then it is a no-go, all right? That tells you that there's no momentum there, and price is most definitely going to be coming to the downside instead, all right? Because bullish momentum is weakening and bears are starting to take over and short positions are starting to pile up, all right? So that's exactly what happened here. It came down, it went back up a little bit, but you can clearly see price was not strong enough to go above this resistance area, and it ended up coming down. And usually my entry target for shorts is when price action comes down and crosses below this 7-period simple moving average right in here, all right? So when it came back down, obviously you can clearly see within these 3 candles right here, it did not have a good, solid, strong closure below that 7-period SMA, all right? It ended up going back up here and then ended up coming back down here. It did close right in here, so technically you could have opened a short right here and you would have still been fine. But the next candle opened up green, tried going back up again, ended up failing once again. So then it ended up coming back down again, and this is where me personally, would have ended up shorting it right in there. All right. So you end up getting into your short position right in there because obviously it failed to go higher than this resistance area right here. So you get in on your short, and then based on how you personally trade, as far as taking profit goes, that's going to be all up to you as an individual, okay? Me, for example, my trading strategy, especially with scalping, revolves around making at least 10% profit minimum on a daily basis after exchange fees, okay? So realistically, I'm personally happy about closing out any day of trades as long as I make at least 10% that day. And it's different for everybody, okay? For example, I have a good crypto trading friend who also day trades and scalps like this also, but with a little bit of a different strategy from mine, and his daily profit target goal is a little bit higher than mine. His is 18%, simply because that's what works best for what he personally needs to reach his personal goals, okay? So everybody's goals are different, okay? So if you were to get in on this position right here and ride it all the way down, you would want to go until you reach your profit target, all right? So obviously we end up, getting in right in there, and then we end up coming down. And usually when I'm scalping, I usually only use 10x leverage when I'm scalping, simply because it's just, it's an easy number to work with, and I'm not managing more risk than I can afford to lose, okay? So I'm not taking on much risk, and I am still able to profit from making a 10% move, all right? So there's 2 ways that I go about knowing when to sell when I'm in a short position, okay? It's either 1, when I am up by 10% or more, or when the candlesticks start to deviate super far away from the moving average, like you can see right here. And I'm talking about the actual distance between the candlestick and the moving average right here. All right. So as you guys can clearly see right here, it's kind of hard to see, but you can see from this candle right here. Let me go ahead and get my arrow marker. From this candle right here to the moving average right here, you can see that there's a very large gap between the candle and the moving average itself. That tells me that we're probably going to have a little bit of a reversal soon, and I should probably get out of this position here. All right. So I would have probably ended up selling out somewhere between, obviously, roughly between $1.71 and roughly around $1.70, somewhere around there in that general area. All right. So right there, you would have made a solid roughly around 36% or so. That's with 10x leverage. Obviously, without leverage at all, it's 3.6%, but with 10x leverage, it would have been right around 36% profits right there. All right. So realistically, it's pretty damn easy to trade with this strategy, all right? The only thing you have to keep in mind is obviously you don't make your buy and sell decisions solely on the indicator itself. Obviously, you never want to do that. You have to wait for these confirmations. For instance, obviously, the confirmation for this trade was the failure right here. The failure right here for price action to go above the resistance area up here. That tells me, one, that bulls do not have enough momentum to go any higher right now, and two, we're probably going to end up going to the downside and bears are going to start taking over. All right, and that's exactly what happened right there. Okay, so overall here, guys, shorting on these smaller time frames, it's really not that hard. You just have to know how to read the charts with whatever strategy you're using, and honestly, have common sense, okay? If you have common sense and you know how to use price action and you know how to read price action and you know how to read these various different support and resistance levels, you will do just fine trying to short trade the overall crypto market here, all right? So overall here, guys, before I go ahead and wrap up this video, if you feel like you got some decent value out of this video and you enjoyed this video, be sure to go ahead and subscribe to the channel, hit the like button below the video, and go ahead and leave me a comment below the video with your thoughts on what you thought. And with that said, guys, thanks for watching.